Great. Good evening, guys. Kenneth Tortoise Capital Nightly Strategy Podcast for November 25th, 2022. We'll start with the sniper trade of the day. This one is Cliff Natural Resources, 3 minutes. No surprise, metals have been in play. They're always in play. Here was yesterday's close. Here was the open. That's the gap down. It's a large gap. It's almost 2 mmRBs. It reverses to the high, and then the next bar takes off and starts going. So we put a entry in with a standard risk box, and I like that it took off that extra yesterday's, like that last little high of yesterday's closing range. It's not necessary, but it's always interesting. All right, by this point, we should be at no lose plus dinner for two, somewhere in this bar, which opened here and then made a new high, like right there. By the time price gets to here and has taken off, we should be able to move our stop up to about here and just lock in. We want to lock in that little wedge, declare that a no lose plus dinner for two. That's where it's our money, and then we will have taken this much risk. That risk, that 1 hour risk, is off the table. Check or hold. I take that as a 1, 2, 3 exit. And we lock in this much gain. And remember, this is going to be a low volume day anyway. Day after Thanksgiving. It closes early. So that's about a 0.7. It continues to fail right about here on when the RL10 rolls over, crosses the baby dragon, gaps or lowers, gets a lower opening, continues to fail. Right around in here, I was considering the short. I really am more interested in probably down around here, which is the low of the day. But I was not in a hurry. I was really looking for this kind of motion. I was spiritually, psychologically not prepared to be short. If I had been short, this would have been the reasonable price. This would have been reasonable here too, because you have a PSAR flip, and it makes a lower than that one. This fail right here. That was, if I was going to go short, I have to be prepared to do that. I was just not prepared to do that. I was still thinking we were going to get along out of this one. So that's what I get for thinking. When this rolls over, at the edge of the dragon and then starts failing again, that's the next place I looked at getting short. I looked at getting short here as well. I just couldn't pull the trigger on it. Uh, so, and what the point I want to make is that anywhere in here where it breaks the dragon, PSAR flip, rolls over, rejects the edge of the dragon and is failing. I mean, you get the dragon down, the RL10 baby dragon down, the RL10 is down, make a new low. So anywhere in here is a reasonable entry, and then a price action that gets you to here and starts to reverse. You could just exit, and then if you got here, you make that gain. If you went here, you got that gain. So there was opportunities on the short side here I just was not prepared for. Time, will, pattern, and money. All right, so now that's a 1-2 right there. All right, so here's a low. Now this one opened at the low, so I don't count this one as a 1. So this made an equal low, so this is now tentatively bar 1. Now, and closes here. Now this one opens here, makes a bit of a low, makes a bit of a new high, and then closes here. When this closes, when that second bar closes, now we can test to see if this is a bar 1, 2 of a 1, 2, 3. Like, we don't know that this is actually bar 1 until bar 2 closes, and then what we do is we inspect it. We'll say, did it make a higher low? Yes. Did it make a higher high? Yes. Therefore, this is bar 2. Those two things have to be true for this now to be bar 1. Now this is bar 2. So now bar 3 is going to open right where bar 2 closed. And what we're looking for is, we're now paying attention to the low of bar 2. Now bar 3 has to make a new high above the high of bar 2, then that is a signal to go long, as long as it has not made a new low compared to the bar 2 low. So it opens, and now what we have essentially is a yellow zone in here. As long as it stays in the yellow zone and does not make a new low, then, and only then, any breakout above the high of bar 2 is a signal to go long. That would make it a bar 3. Check or hold. So that's the 1, 2, 3 pattern. We're essentially looking for something like this. When bar 2 closes, we check to see, is this low higher than that low? If so, then we can say retroactively that that is bar 1. You know, that was it's made the swing low, so it made a new low. And then we're also checking to see, did it push to a new high? If so, then this is bar 2, then this is bar 1, and then what we can do is buy a breakout of bar 3, of bar 2. We can buy the breakout as long as it has not made a new low. So it could very well just have open and came down here, tested, and then broke out. That right there would be a bar 3 entry because it had not made a new low below bar 2. This is just a way to try to capture this kind of pattern where we see this, an orderly move that's making higher highs and higher lows. So a pattern that looked like this would not be, this one retroactively we can see because it made a new low, that's no longer bar 1. So now this becomes potentially bar 1 because it has the lowest low. Then we would see, did it do this? Oh yes, now this is bar 2. That's now bar 1. Now we can draw the line here and say tentatively, if this opens and keeps going without making a new low, then that's bar 3 entry, 1, 2, 3. All clear? Now, let's see if we have a 1, 2, 3. This was the working low, tentatively bar 1. When bar 2 closes here, we can say, yes, it made a higher low, check. It made a new high, check. That makes this bar 2, that's a bar 1. Now here's bar 3, it opens. It went higher than bar 2, so we could technically get long right here because it has not yet made, that should be red, it did not break the low of bar 2. So where do you put your stop on this one? What I like to do is just take this. Just take our MMRB, because why not? And just hang that off here. And that gives us a manageable risk box. Now the thing that we notice is there's the belly of the RL10, so you could already shave off that much, because you would not stick around longer than here, because if this price fell, you'd be getting short here as a collapsing dragon. So you're never going to stay longer than that. So I've already reduced my maximum loss to 0.7. If you took a 2-bar low, you'd be shaving off even more. And so you're only taking half of an MMRB. And then the tactical region is here, the top of this RL10. This is where it gets interesting, because it's cleared the statistical resistance. So that means that this entire space here is your tactical trade space. And the only thing that I have to do in the tactical trade space is get my stop, let's just say it was here, above my entry. Something like that. If I can do that, then I have locked in no lose plus dinner for 2, and your entire psychology will change. Check or hold. So, could we have gotten long here? The answer is yes, could have. If we do, we would call that a 1, 2, 3. Because 1, 2, 3. I didn't, but we could have. So now let's see what we got here. If we do get long at a 1, 2, 3, this thing goes up and rolls over. Now you get 2 lower highs and starting to fail as this comes out of the dragon. So if you had gotten long here, you know, if this thing works, it's supposed to go right now. It's supposed to go above the hump of the dragon, up to the top of the last place that it got to from this trade. It's supposed to go, but it didn't. It's doing this. That's long enough. and you'd take about a 0.2 loss. So if these don't work right away, they're not working. So now let's see what we got. We have that hump of the dragon rolling over. There's the spine. There's the belly of the dragon. Notice here's that PSAR. Just as a point of reference, I put the, if you had gotten short here, this was the MMRB box. If you'd gotten short here, this would be the MMRB box to the top of the PSAR. So when you get long here, it's got to get out of this. It's got to get out of this box to be interesting at all. It didn't. So as soon as that starts rolling over to here, get out. So now we're taking a look at this piece. We've got the RL10 here, and in this price action up, it was strong enough to make the RL10 reverse, but now it starts rolling over. So you get a peak of the RL10, crosses the baby dragon. Here's the belly of the RL10. There's the low of the day. You don't have to wait for that. That is the statistical bottom of price, is at the where the RL10 bottoms out. So what would we call this entry? Collapsing dragon, correct. And we put our standard risk box on him. And now we get first leg down, second bar down. Could you take your stop here and move it to there and lock in that piece? Could you do that? You certainly could. Why not lock that piece in right there? So let me make that a red line. So if I put my stop right here, I've locked in a no lose plus dinner for two. It held pretty happily. And now I can actually start managing this thing down to here, to here. So you decide how you want to manage that. I like to go here, here, just keep marching it down. This is starting to get problematic, starting to flatten out. When that thing gets stuck in the middle of the dragon, it's had plenty of time to turn. There's the turn of the RL10, crossing the baby dragon, a couple rising lows. That's enough. You could wait for this. That's fine. That's about +1. To get out anywhere in this region, it's about a +1R. What would we call that entry? SSC. Yep. We have a great big move down. We're about almost 2 hours into the morning. Makes an orderly turn. PSAR flip. Standard wrist box. Aiming to get back to here. Nothing going on. And the market closes early today, so this ended up just getting into pure noise and nothing to see there. So we have, for the trade of the day, that first little 0.7 up, a couple opportunities to get short, didn't take it. I did get short here, took that one for about 1 hour, and then this just went sideways until the day closed. So about 1.7 for the day. There just wasn't much movement. This was an extraordinarily non-trading kind of day. Okay. And we'll see that reflected in the sectors. So we have the S&P was basically flat at minus 0.2. The Russell and the Dow up about 0.2 and 0.4. Treasuries and emerging markets down 0.3 and 0.5. Qs down 0.66. So hardly any movement at all. This was just a agreement not to trade today, I think, is what the market concluded. We see that reflected. Even the worst sectors were only down 2%. Ethereum, the FANGs, Apple. Here's our metals. Cliff and Alcoa down 1.25. U.S. Steel down 0.6. So even though it was a very quiet day, the metals continued to be more active. Here's our three semiconductors. Texas Instruments, Intel, and NVIDIA down 1.1 and 1.5. So the metals and the semiconductors did offer some opportunities today, not much. I'm not going to read too much into the sectors. I will note that Tesla resisted the urge to sell off. There's still plenty of room to the upside on that one. Above the line today, there's the S&P. Above the line was Bitcoin, oil exploration, lumber, discretionary, clean energy, staples. I mean, we're talking between 0 and 0.07%. Finance up a third. VIX up a half. Real estate, marijuana, commercial real estate. The best performer in our stack was only up 0.9. So you can see there was really nothing happening today. So let's not overthink that. The 150-day look back, you see a strong leg one, leg two stabilized, but closed at the top of the stack, and it's right at the key test level. So now we're going to find out if there's a third leg that can take it back to 430. And today we went into sideways quiet. Sideways quiet. So that has every chance of carrying on for a third leg up. Even if this comes back this far, it came back that far before. As long as it stays essentially north of 390, then 430 is in play. Any break below 430 or 390 though is leg one, leg two. So that'll be an interesting play next week when people come back from holiday. You can just see how narrow the 5-day range is here. And here's our little 1-day range, tiny little 1-day range. There's your 5-day range. And here's your 10-day range, also very small. There's your 20-day low and your 30-day low way back here. So we're starting to leave the 150-day low behind. There's your 10-day low. We've progressed that far off of the bottom from 350. Which was 32 days ago. So there's your leg one, there's your leg two, and it's stabilized. So let's see what it has on Monday. When we look at our regression line fractal framework like we do on the weekends, you can see that that's all pretty positive right there. You've got the 90 has made a turn. The 270 has flattened out and is getting ready to make a turn. That is very favorable. That has not been the case. Look how solidly down the 270 has been. And the 90 has made one turn on this strength, couldn't hold. That brought this move down here, brought the 90 all the way back here, but now we're across the danger zone, and this is all favorable. So 430 is in play. That's what bottoming action looks like. We've had one surge to the upside to put some dimensions on this. Right? We're halfway back off this bottom, aiming for that top. There's your midpoint. We're right at that midpoint. We've made that move. Now the question is, will we make this move or that move? We're in sideways quiet. That's the optimist, and it's a reasonable optimism. But that's what bottoming action looks like. Again, brought it right back to the midpoint. So I'm ready for, on this quietest of quiet moves right in here, compound critical state, I'm in the zero state. I don't care if it goes here or if it goes there. I just don't care. I'm going to follow price. Here's the price levels where it starts breaking. Here, here, and here. That's what the price levels look like. Each one of those red lines is a tripwire in your mind. Each one like a little popping sound as they're tripping booby traps all the way down. Like don't wait for it to break below 360 to get short. Each one of those is a little extra confirmation that it could be short. Okay. Sideways quiet market. All right, let's see how the traders traded today. There were a couple. All right, we'll start with a Tesla. So this looks like the OR3, and he got short and then scratched. Good. That's that's not quite a 1, 2, 3, but I appreciate the move. Scratched and got of it. No harm, no foul. Now, when this rolls over, the question was, is this too aggressive for a K2 short? No, it is not. Remember, when it's monkeying around like this near that VWAP, and you put a small manageable risk box on it, you don't know how far from that zero line it's going to go. But the sooner you get in, you know, the sooner that you get in, the sooner you can move your stop to no lose plus dinner for two, and you don't have any risk. The longer that you wait for confirmation, we don't know how far that's going to go. If it's going to go this far, the longer that you wait for confirmation, the smaller the reward. And the longer you wait for confirmation, the stronger your conviction that that's the move that you want, which makes it harder to get out. So I just say, look, if it's at near a zero line and I get an MMRB on either side and it breaks out, I just get it. So yeah, could you get this when it breaks the VWAP? Yes, you could. If it breaks below here, yes, you could. And then instead of getting this, you get this. Then this is your exit and you make bank. This is a good PSR flip. Cash is perfect. I like this one because it could have failed. It didn't. It's above the VWAP. It tried, failed, done, and then the day is done. So there was a little more we could have gotten in there. Here's Cliff. That's that early morning move, the OR3. 1, 2, 3. Breaks the VWAP. Leaves the dragon. PSR flip. We could be short here. Got short here. Now, see, that's exactly the point I just made. Here's a 1, 2, 3 short. There's PSR flip. So with less than 100% confidence, you could be short here. And then it gives you that much, and so you take that instead of losing that. That's what the extra confirmation gets you. It's less returns. I like, this is supposed to work. It didn't, so I like cutting it there. As soon as this rolls over, yes, that's an excellent short, and you nail it. And why not get paid? Yes. U.S. Steel is essentially the same trade. It could have, on an ideal day, got this. This is still not bad. Those are all good. +1. Satya with Tesla. All right, so this collapsing dragon could be right here. See this fail? That's the collapsing dragon right there. This is not a collapsing dragon because this price, that's just a price bar. The RL10 is the price. So we take the low of the previous, when that breaks, that's the CD. So we could have been short here and then got paid somewhere around in here on the rising lows. He takes this early, I think. Oh, no, my fault. I see this now. So he was short here, took that as the exit for a -0.4. We could be long here, or here, or here, but that's a good entry. 1, 2, 3 exit would be there. That's very good. He waits for the RL10 to cross the baby dragon. Good shot. I like this short. I like the way you cut it. You could be short again right here. You still got it short at a right time. 3.6. There wasn't much in Tesla, but you got what was there. See my previous markup. Oh, no, we'll just go. Oh, yeah, I already covered them. Okay. All right, let's go to the reports. The very rarely seen sideways, quiet market, that's a sign to go long. Because sideways quiet is quite often the pathway. When it gets out of the bear and the volatile, it not unusual for it to move in this direction and then up into the bullish. So we've got good strength, risk on from the risk Z, strong exposure in ETF2. Everything's looking good. And we've covered these. Let's go to the ETF portfolios, the BMR portfolios. Pretty strong compared to the 4-month moving averages. Diamonds, conservative U.S., and then the globals are doing pretty well compared to the S&P. These are the two anomalies to me. Tech still has a long way to go to recover. And the defensive play of real estate hasn't done much better, although, to be honest, its last 1 week and 1 month were pretty good. When it's that much out of favor, buying houses on sale, always a good idea. Materials looking pretty good. And finance coming out of the hole. And I would also say industrials are pretty good too. That's a healthy sign for the business cycle. ETF 32, energy is just very cyclic, we know. But yeah, there's your finance and your industrials and your conservative U.S. and materials. And those are all better than the broad index and better than the Qs. So that's the conservative U.S. economy repairing itself. Let's go to the tradables. We're using ATR percentage to evaluate the top 30 ETFs based on average daily dollar volume over the last 30 days. So it's sorted by liquidity. And then we're looking for the ones that are exceptionally volatile, like energy is tradable, China, semis in Brazil, biotechs, gold miners, and oil exploration. Shift into the daily. We'll go to dashboard 1. Yep, sideways normal. Merck, diamonds, not a surprise. Tesla, Intel, Alcoa. We've seen those very tradable and have a long way to go to get back to their 10-day high. So that's the tradable opportunity based on value or new leadership. Tons of dojis today, no surprises. I don't want to read too much into it because it was such a low volume day, but JP Morgan, Merck, big breakouts, Procter and Travelers, everything good. Those boring companies just making money. In the ETFs, breakouts in diamonds, Eurasia, Japan, Europe, energy and finance, utilities and healthcare. So it's not the techs, it's the rest of the market repairing itself. All right, in the auto framer, let's see here. These are all the ones that are above 2 to 1. So you got to love Tesla, Intel, McDonald's, and Chevron. Plenty of goodies that give you low risk trades to the upside. Lots of squeezes today. That's not a surprise. So we're not going to look too deeply into that. Just a couple Godzillas. Everything's super quiet today. You'll notice that when we look at the Z scores on the 1 day. When we look at the 1 day move, this tells you how quiet it was today. We find the most volatile 1 day moves in the entire S&P 500 scored by their own Z-score. And when the top three are not even more than 1 sigma and everything else is exceptionally quiet, that's how non-moving it was today. So I don't want to over infer from such an anomaly of a day. Yeah, but there was nothing moving today at all. So the standard stats, we're in pretty good shape here on the MACD histogram. There's so much stuff in the fall and the summer. That means they're above the zero line. So if that's the zero line on MACD and the signal line is below zero, that's what gives you the winter. Then when it turns, it gets into the spring until it gets back to the zero line. And then when it's upward sloping and above the zero line, you get into summer. And when it rolls over, but is still above the zero line, even though the slope is rolling over, that's where you get fall. So there's a lot of things in this condition where there's been a nice move up and they're just stalling a little bit with very low volatility. That gives you the kind of summer, fall, summer that we're going to be looking for next week. If we see that summer, fall, summer looks like a Kata 2 with the MACD. So we're going to be ready for that one, okay? The ones that are still in the summer are the ones that are already well postured just to keep going. That's why I'm liking Microsoft and U.S. Steel, things like that, okay? When things are so strong on the 2, 10, and 30, what I do is I go see which ones have been enduring even longer. So Merck, JP Morgan, Walmart. Those are the ones that have been very, very strong. In Techland, it's been IBM and Cisco. Look at that. That's where some of the industrial strength is coming from. Caterpillar, McDonald's, and Chevron looking good. Those are not tech names. Same thing over on the ETF side. Industrials and finance. Diamonds in Europe. Healthcare. That's not tech. That's people quietly buying value in the business cycle. The guys that raise cash as tech continues to get slaughtered. That's the trend. All right, that's everything we got for today. We'll get this published and posted and see you tomorrow. Oh, wait, I'm sorry. There was somebody asked me a question. Hold on. Yeah, Maria's True Storytelling is 8:30 tomorrow morning at the usual link in the OWL group, okay? And we'll see you guys tomorrow.